Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to be covering the end of the first quarter. This is the final month. I'll be going through intermediate analysis and much more in depth with some other metrics that I'm believe is important. Let's get into it. Okay, folks, it's good to be back. I'm looking forward to really interacting with many of you folks. I'm not doing the big, long intro like I used to, so if you just got on, you can probably scrub the timeline back and get to the very early comments. So let's talk a few things before I get into the videos and as we relaunch the Kendall Report channel. Many of you know I was out for personal reasons for the last several months. It was a pretty tough time. Lots of things were going on in the markets at that time. So let's just talk real quick about being involved with the channel and what we're going to be doing going forward. So there's been some changes that have happened. And one of the changes that happened is I started a Substack account. More on that in a minute. But this channel is going to become about macro for the most point. As I go through the week, I will show up every day at 6. How long will the streams be? Probably not an hour. I'd like to get them way down. One of the things, like I said, with the Substack account, that is where I'm doing all my short-term analysis. And I'm going to continue to deliver the day-to-day short-term analysis. So if you haven't got the indicators, you probably should go and get them. All the details will be in the description below in this video. But the main thing that I'm going to be doing is really starting to reveal how to make some money. I plan on having some portfolios we're going to follow on the channel. It's going to change a bit. Still be talking macro primarily on the YouTube channel, and we'll cover some events, technical and quantitative events that I see coming on. So just make sure you hit that like button tonight, because one of the things I really would like to see on this relaunch, if you're watching this right now, just hit the like button, even for fun. If you don't like what I say at the end, maybe take it back. But hit the like button. Let's get YouTube to find out that Bob's back, and we'll go from there. So let's talk about a couple of things that I want to cover tonight. And it's nice to see some familiar names. Hello, everyone. Let's talk a little bit about something that the big question that we all have is inflation dead, right? So we're seeing these metrics come out. We saw the PCE numbers come out the other day. Everything is feeling a lot better. We continue to see the equity markets and Bitcoin as well just starting to accelerate and just going through the roof. Meanwhile, the backdrop, all the noise in the markets is very interesting, because we've still got lots of so-called the crashes coming. And then I'll unpack this a little bit more here as we go through the stream tonight, is talking about the banks. And the banks are starting to come under a lot of scrutiny again. So there's tons of stuff going on, and I'm digging into this. So probably as we go through the week, depending on what happens, we'll probably be focusing then on some of the financial elements in the banks and some other things that are going on. So it's interesting to me is that a lot of folks spend a lot of time trying to figure out the most negative thing they can. I saw something on X feed, and I responded to it, and they were quoting a zero hedge. And, you know, to me, that's like this parody fiction site that's presented itself as news. I mean, I've said this before, very little ever comes true of their dramatic stories and the end of whatever. It's always a lot of negative stuff, and the markets kind of drive around this negative narrative. And I think what we saw as we went through last week and the new highs and everything that was coming in, I think this is just lots of short covering, a lot of option expiries, and we're just seeing just a squeeze go on. Now we've got, I'm looking here at the futures. We're down 2 handles right now, 51.44. But I talked about on the Substack newsletter for Friday that we were likely going to take out the 23 handle and move up towards the 51.33 and above. And we actually printed well into the 40 handle. And so we're still seeing this underlying bias and bid in the markets. I think I'll do my best to actually bring up the NVIDIA chart. So might be a little bit of a rant since I haven't talked to you for a while, but let's just get into a couple things. Is if you go back, if you're not signed up for Substack, I'm kind of pushing this because this is a place you're going to get some information every day. But if you go back, you can sign up for free, and there's a lot of content that's for free. So it's kendallreport.com/Substack, or you can go to kendallreport.com/newsletters as well. So either one will get you to that point. But the reason why I'm telling you is you need to see the annual report that I put out, and I believe it was December 29th. And that narrative is what's driving, for me, I believe this year, until I see something different, I'm going to continue to stick with what I'm seeing here. And I am big on AI. I'm big on what AI is doing. And all you have to do is see the big turnaround that happened last week. It was all about NVIDIA, right? This is all about AI and what's going there. But more importantly, we're continuing to see these productivity numbers start to expand. And that's my big narrative on that report. So take a read of that. I'm not going to go deep into that. But the big narrative is that what we're going to see is a continuation of productivity gains. And we're already seeing this stuff. And it's interesting, our Fed talking heads, I saw the other day, they're still talking about COVID, they're still talking about the pandemic, and they're still talking about supply chains. They believe that the reason why inflation is starting to come down and the supply chains are freeing up and all those things are happening, when really what we're seeing, there's been a steady gain in productivity. And I think there always seem to be a bit behind the ball from the standpoint of, remember the transitory on the inflation and all the stuff that we've watched happen. I believe once again, they're not in sync with what's actually going in the marketplace. And I think a lot of this information I'm talking about on AI is actually going to override a lot of the negatives that are out there. It's just kind of this grinding story that goes on. You're going to see when I go through the quarterly charts on the S&P here just shortly and talk about the database, WaveTech database, and all these things, you're going to see what I'm talking about here is that what we're really looking at from the standpoint of the markets is this ongoing narrative that is pushing things higher. And I've mentioned this, certainly if you've, quite a few of you have signed up for a Substack letter, I appreciate that. But if you know just the narrative that I've been talking about in the newsletter every day, I think I've already published 50 versions of that newsletter already. And there will be one out for Monday. But what I'm trying to get to here is that this productivity thing is going to continue to drive these markets higher, and it's going to just baffle anybody that doesn't get what's going on. And there's going to be a lot of cross currents, but right now, you're going to see tonight, when I talk about the database, it's actually, I can tell you, I haven't been watching this database for, I don't know, better part of 30 years. And I know it forwards, backwards, and sideways. And it's absolutely amazing what we're seeing come out of the database, because it just keeps this forward-looking environment. So I don't want to go too deep in that, because that's what I'm going to cover next. So the plan tonight will be, we're going to stick pretty much to intermediate, longer-term analysis. The daily stuff, if you want that, and the short-term analysis, go to the Substack, get that. Should be a free 7-day trial as well there. So that's going to be really big, because what I'm trying to do with this channel is ultimately pivot a little bit, still keep the information I'm giving to you right now, but try to, from a macro standpoint, And that's pretty much what I think a lot of people are watching. A lot of my hour-long rants and doing live streams, what we're seeing is really about 20 to 30% of the videos are being watched, basically the macro stuff. So I'm going to stick to that. So let's talk, just looking at my notes here, let's talk about a couple other things we have. Of course, we saw Congress kick the can down the road, another resolution just to keep things running. Nobody's going to make any big decisions. It's a election year. We're just seeing all of that same rhetoric. But what they ended up doing, it looks like, which is a little disturbing and is the reason why when you read my annual outlook, that the spending habit they have, they're trying to increase yet another 10%. I'd like to see that number. What you'll see in that report is if they tweak that number, it doesn't have to be down to 3%, but if they go from 10% to get it down to 7 or 8, I suspect that we're going to have a different administration next year, and I think there'll be some different thoughts to come in. How long this transition will take to get about, I don't know. But what we are seeing from the standpoint of this migration, it looks like everything's in play, and at least for the time being, the productivity will continue on. So I'm just looking here. Like I said, if you haven't hit the like button, make sure you hit it. Those of you on the line, please give me a like count. We got to get it. We only have like 80 viewers. Usually by now we have hundreds, but I haven't been online, so a lot of folks don't know that I'm out here. So anyway, make sure you tell your friends and share the videos. Let's get into the database. That's nice. My one of my devices is not working here. Bear with me one second. Okay, so as we look at the database, what we're going to see here is we're at 86.31% bullish. And that's a crazy number, especially since we've been well above 80% for probably about 6 weeks, the better part of this year, as we've seen traction to get on. And that is, I think this is phenomenal. Okay, I want to show you, and I'm going to cover this in Substack. I've got a dashboard that I'm creating, but look at the returns here on the markets here, and some of this stuff, bear with me, some of this this view is a little bit distorted. I apologize. Couple things that it's like starting up an old car you haven't run for a while, so I just got to adjust a couple screens here. But yeah, so what we're seeing is interesting. There's only one sector that is long in the tooth, and that's conglomerates, and we're seeing that is up 27%. But look at it across the board, some of these numbers. And for instance, technology, which obviously is being driven by the top 7, we'll say, and definitely NVIDIA is in that play. But look at this, it's up 20% on this is a proprietary index here, and it's only 51 days into its normal cycle, and it's normal 141. And this is what I'm talking about, the standpoint of the forward-looking part of the database, where right now most of these sectors are still looking forward, and I've been hammering this on the Substack newsletter, is that we're looking at a minimum of July before we start to see any critical levels being hit in maturity of these sectors. And so what we're likely to see from the standpoint of what's going on the database is there's still a lot. It could carry us all the way into October, and it's interesting that as we potentially get closer to the election this year, that things are starting to look a little different. And so I just want to, just folks, I'm sure you would have complained again, but just give me a thumbs up or something that the sound is coming through okay. The meter's not running as good as it normally looks, so just let me know all's okay there. So let's kind of go in and let's look at at what I call the all stats page here, and it's what we're seeing is from a maturity standpoint. Right now, the duration on the weekly charts right now, the duration fulfilled is right now right at 0.46. We're halfway through this cycle. And one of the things that you'll hear me talk about here in just a minute is that as we go forward, some of these metrics are crazy. I'm going to talk about some Fibonacci targets, some things that are going to be coming out in the future here, and it's pretty crazy. So basically, we're halfway through the cycle, and there's you can see, as I said here, I'm just going to scroll down a little bit on these sectors. They're very early, anywhere from a third to some of them are not quite to a half, but they're getting close to it. So the overall metrics are telling us that we're halfway through the cycle. And one of the things that I'm going to emphasize is you look back in the last few years, and I covered this in the that's just let me know, folks. That's what I was worried about. The volume's a little low, so I try to crank it up a little bit. Let me know if it gets better. But the bottom line is that as we look back, just look in the rearview mirror for a minute. We go back to 22 was a really rough year, and everybody's predicting 23 was going to be worse. Of course, it was one of the best we've had for a while. And then as we come into 24, everybody's, because 23 was so good, 24 is going to be bad. And we're already seeing some amazing metrics. I think the NASDAQ is up about 8%. S&P is really competing pretty hard, around 7.6. And of course, the Russell is still a laggard. And I probably won't go into it tonight, but as we go through this week, one of the places and asset classes that I think are going to be significant is going to be midcaps, more so than the numbers that we're going to see in the Russell. The Russell just got a lot of zombie stuff going on out there. So we'll just have to keep a close watch on this stuff. And like I said, I'm trying to crank this thing a little better. It sounds like it's a little light. So anyway, we'll get this all figured out as we go through this week. But all of these metrics are incredibly positive and looking forward. And like I said, the goal for this tonight will be to bring in some longer term perspective. I'm already into this thing 18 minutes. So guess what? It'll probably end up being an hour. So, but I'll do my best to get through this. There's a lot to cover. But the database in itself is very significant. If I flip over and we get over to the daily, and I've been talking about this as well, we're not getting this big traction on the dailies where we're pushing 80%. So we're kind of just rotating here on the basis of the dailies. We still have 10 of the 12 sectors that we follow. These are all custom indexes out of the software. This is actually, you can still see a lot of positives. Capital goods up 20%, up 30% technology, and that's in 73 days. Some of these metrics I'm just highlighting here on this 73 of 59 are starting to get a little long in the tooth on a short-term basis. But many of these things have just come in. Like, for instance, conglomerates on a short-term just came in. Financials just kicked in, which is interesting, and talking about the banks. Now, probably as we go through this week, I'm going to go through different themes in what I'm going to focus on. Okay, good. I'm glad it sounds a little better. So let's kind of migrate over and let's get into the longer term aspects of the markets. And this is right now, this is a monthly chart. So we'll go ahead and start here. And I think it was interesting as we went through February. Those of you who have the indicators and you had the market grid up, we're seeing a couple things happen here on the monthly charts. I mean, this thing's been a moonshot since the last week of October, right? We all know that. Just a moonshot. Somebody made a comment, I think on Twitter, Bob, how could you be gone at such a critical time? And like I said, it was personal issues that I've been dealing with that got me to step back for a little while. I had to deal with some personal issues with some family members. So the bottom line is, though, we're seeing the market not necessarily stalling yet, but we're looking at the month of March. We're starting to get into some peak levels. And it's interesting because folks are talking about these frothy levels, and I'm going to show you in a minute that we have projections, and I discuss this, I keep referencing the annual report, but of the market going to 6,100, 6,200 basis, the S&P. These are really big numbers, and right now it doesn't look like anything's going to be able to stop it. Now, that doesn't necessarily mean this year, but we do have some upward Fibonacci targets here that I want to discuss. From this, I'm going to go to the monthly chart, the quarterly chart, and we'll break down this longer term view, because I think this is important. I always start off each month with this long term view. I'll try to unpack this in a very short form. This will kind of be a prelude to, I'm sure, what I end up talking about in the newsletter. And so we look at some of the numbers. We're looking at 51.55 is R1 for the month of March. Okay, we're very close to that. I think the last I looked, we were just trading 42-ish, and we got up almost, I think it was 49. I'm going off the top of my head on Friday. But these numbers, if we go to R2, 52.21, 52.88, and the probabilities within the normal volatility range is for us to print up as high as 53.47. And one of the things that happens, and this is something I talked about years ago, and it's even a bigger factor now, as these numbers get bigger, all of a sudden 1% move represents big market movement. So these numbers that sound so big, if we were to break them down into expectations on a percentage basis, it wouldn't be that big of a deal. So just know that that's the likelihood of everything that is coming in. So this is also S&P cash we're looking at, not the futures, okay? But we're also let's look at the algos. They look like they want to soften a little bit, but this is the thing and I think those of you that one of the videos I did, I don't know if it was a live stream around the Fed, something I've done in the last couple months to try to get up to date. One of the things I was talking about is even though these indicators are coming down, and even if they cross like the first derivative, all that means is that the momentum is dropping. And even if I put my cursor here on the indicators and look at what the worst that's being forecasted all the way out to May, we're still a plus 0.94 on PPM1. And we go over to PPM2, it's huge numbers. It's 1.51. And then you see on the longer term basis, it's just kind of flattening out, but it's still in an upward trend, and nothing's going to change with this stuff. The absolute worst case is maybe we trade up into an R2, maybe we set up some kind of consolidation phase here. So let's go super long term here and bring up the 3-month or the quarterly chart. And this is where things get crazy, in my opinion. I remember covering this back in January. I think I did do an early something that was a little bit early in the month, and I was talking about the market grid from this standpoint. And really what we're seeing here, which is pretty phenomenal, R2 was 50.14, R3 was 51.43, so we printed that basically. Right now the high is 51.40, so we printed R3 quarterly. I thought these were crazy numbers when we were looking at them at the beginning of the month. I thought we would have some type of scenario. If you look at the last quarter, going back to that October reversal, we had a huge number. We printed all the way up to RTX last month. The numbers, folks, I don't know how big they are. I think you can see most of them. I'm going to adjust this screen just a tad just to make sure you can see them. But over in the right-hand corner, you can see the actual values. And last quarter, which is the fourth quarter, high was 47.93, and we went just above the RTX number, and now we're seeing this extension. Here's where the Fibonacci targets come in, and this is the only way, and I'm going to say it again, folks, I'm sorry. If you've read the annual report that I did at the end of last year, this is one of the forecasts that I was talking about and this is that reverse fundamentals that I've told you folks on this channel that you need to try to develop some kind of concept that will mark these out. So the deal was, if we are going to go to this upward Fibonacci target right now, which is at 61.18. This is a 61 handle. That I'll put the crosshairs and the cursor right there. This is where you're likely to see the market move up to. Now, it's going to take maybe 2 or 3 quarters, so we're looking at 25 here, folks. We're not looking at next quarter or all that. What we're looking at is the potential for this getting up there. And I did the numbers and all the metrics from where we were, and we're a lot closer now because of the kind of quarter we've already had. But we're looking at still the potential here for 52.59, and that coincides a bit with the monthly chart that I just covered. So that is going to be probably some of these numbers on a quarterly and a monthly basis are going to align themselves, and then we won't find out, we won't get an update for the market grid until we get to the end of this month of March. So there's a little ways to go. Maybe we get it to turn down. It really depends on where we finish on this bar. And even if we just finished around R2, that's 50.14. It's possible that we could stall here. I think one of the newsletters I did last week was called S&P to stall. Well, it did stall, came down. There was big numbers last week to watch. 50, 60 was a big number. I think we printed just a bit below that. But to buy the dip, that was it. I mean, we traded 100 points higher in a day and a half from that level. So we're still seeing a lot of buying. There's a lot of interest, whether it's short covering, whatever it is. It appears that these stampedes that we've been seeing in these markets continue on. So as far as we come into the end of this quarter, we're likely to see, certainly not getting the 6100, but this 5260 is probably going to be the upper end, and just the analysis I did on the monthly chart kind of is pointing to similar type numbers. Yeah, so Neil was talking about, there was a couple years ago that I was, back in post-pandemic, we'll say 21, 22, I was talking about the S&P going to 5,100. That seemed insane at the time, right? So, yeah, these numbers just keep going. I love I'm really happy to be back on the channel here, folks. So please feel free to express yourself. The rules of this channel is always the same. You can say anything you want as long as you don't call me names. I'm okay with that. I can be wrong. You can disagree with me. You can say whatever you want. Just don't call me names. Anyway, so let's go on and let's click into the NASDAQ. Like I said, tonight I'm just going to focus on these higher level, longer term charts. So let's go. I'm not sure what kind of data. let me get here. Let's go with the composite here, and just see what we can come up with from that standpoint. Now, so we're going to go top down here, and this is the big number. I think what I'm going to do here tonight, folks, is I'm going to go from the NASDAQ, and before we move on, I'm going to bring up NVIDIA, and we're going to take a look at that as well. And I'm still working on the research on a Tesla only, like freestanding Tesla video. I think I see some things going on there that are quite interesting. Yeah, so, but as we look here, look at these numbers. This is quarterly NASDAQ composite cash. And we're looking at 20,110. Yeah, I said that out loud. You heard it right. 20,110, 23,939 is fib target 2. They're way up here. And listen, this, I'm not sure people really realize the impact that AI is having, okay? I can tell you this. We're working on a project, and I was talking to a good friend of mine who owns another software company the other day, and I was telling him, I said, it's amazing what you can do with AI, that programming is becoming somewhat secondary because there's a lot of things that you can generate through, like even a chat GPT API, that you don't even have to calculate. You can do it on the fly. All you have to do is submit the data, and then you can build reports and all kinds of stuff literally on the fly, and then repurpose them through different types of GUI and process out there. So it's pretty amazing what I've been able to do with our WaveTech product and our Portfolio Expert in generating reports and different types of metrics. We actually are going to be automating a lot of stuff that we had done for investment advisors, and what we told them to do, now we can do it with AI, and we can just deliver the reports. And so that is definitely one of the things in the works. But this stuff is huge, and I've mentioned this, I think, possibly in the newsletter, in the report, but I was watching Bloomberg, and the guy from Cloudflare, the data company, said they actually came up with a solution for a job that used to take 8 hours, and they got it down to 10 minutes. And you start compressing, and I guarantee you they still charge a customer delivery the same amount. So you start to compress productivity down 8 hours to 10, and there's a lot of stuff that you can really compress and do, and especially when you don't have to hire programmers to do everything, when you can literally just kick this stuff out through APIs. And we've actually come up with a new, kind of some new metrics that we're going to be putting out there. So let's go to the monthly. You can see some of those. We're looking at from a market grid standpoint right now. We're looking at on the NASDAQ. Around 17,062. So far, we're 16,302. So we still have some leeway, and this is on a quarterly basis, but basically the end of the month, right? So that's what we're looking at. So let's go over and go back. We're going to go top down, I told you. So we started quarterly. Here's the monthly. There's actually some short-term monthly targets that are out there as well, and we're looking at the 16,901 as a target, and then 18,566 is target 2, and you see the fib target 3 kind of aligns with the previous monthly target that was out there that's been updated. And so what the indicators do is they're recognizing the patterns, and they'll update the fib targets. So you don't have to try to figure them out. We have algorithms we built in that will do all this work for you, and it's seamless, and it'll do it on a 5-minute chart or a monthly, whatever. But this pattern is fairly bullish, and like I said, this is monthly, so we're looking at from market grid standpoint, 16,899 is the, let me bring this up just so we can get current high 16,302. So we're looking at R2, we're above R1 right now. R2 on a monthly basis will be 16,620, and then R3 is 16,900. I'm rounding up. And those are going to be targets that are going to be very, very possible this month, as we're just seeing this continuing grinding. Just like with the other charts with the S&P, we're seeing some dissipation of upward momentum where you're seeing the indicators flattening out. But no matter what you go, we're still in big time market trends that don't change for a while. And in fact, we see just where I moved my cursor in the line there, you can see if you look at the indicator down here, it's not going to be until November of 24. Once again, I keep seeing these crossovers happening on the indicators being forecasted. Doesn't mean they will happen, but there's a lot of accuracy in some of these forecasts that we're seeing. Right around the election, we're going to finally start to see a breakdown. Maybe at that point we get some kind of correctional phase from that standpoint. Well, it's actually going to be a very interesting election cycle. We're going to have a lot of noise that come on as we go through this, right? So, but that's the big picture. Like I said, I'm sticking with the upper echelon from the longer term. This is monthly and quarterly update. We're going to do the same thing here. We're going to go to the Russell. Okay, so as we come into the Russell, this is interesting because it's monthly again. The Russell this has been a crazy pattern. And I've talked so much about the zombie companies in here. The banks are part of that. In spite of some of the weakness that we've seen in some of the bank indexes and some of the ETFs there, we're seeing kind of a retest on the lows. I wish I had like 3 hours. I would go through the banks and all that. So this week, so if you'll comment on these videos and let me know what you'd like to hear, I think what I'll end up, I'm going to make a list of things that came out of this stream tonight to actually start to focus in on. Like we've got a number of elements we need to update and assess the risk that's out there. The banks are for one. I'm seeing interesting things out of our database in the financial sector. So we'll go through that later. So let's stick with it. But this is a big issue here in the Russell. I'm not sure how much data I have available. I'm not real good with the, if I can find the mid-cap. Matter of fact, if you folks know on TradingView what the mid-cap symbol is, post it in the line here while I'm going through this. But look at the slope we're seeing out of the WTAR indicators. They are suggesting that we're going to see a continued upward slope. But if we look back in hindsight, we're lower than we were all the way back here in 2021. And really what we've been doing since May of 22, almost 2 years now, is consolidating. And that could be, the old, what am I trying to say here? Some of the older metrics that are out there suggest that this index probably has not a lot of chance to go extremely higher. It's going to take a lot, and I know a lot of folks, I'll talk about it in a minute because we're going to do long-term analysis on the interest rates, but a lot of folks are still banking on the Fed dropping rates, and we'll talk about that in a minute. But this configuration we're seeing here is fairly bullish, and it's carrying us. This carries us into November, December of this year from at least the angle of attack. Now, what we get from these indicators, and this is auto-regression math, machine learning type math, what happens is, depending on what kind of action we get over the next couple of months, some of these forecasts will moderate or they could get even more bullish. What it's saying right now is more likely we're just going to see this slope continue on, and this is monthly. We'll see what kind of data I have here on the quarterly when you go there. I suspect the algos and stuff will not work. Let's find out. Let's go there. Yeah, so we don't have any of the algos anyway, but let's just look at things from a market grid standpoint. We have that. What we're looking at is some of the numbers on the upside. We're looking at the last here at 2076, R1 2096, so we haven't quite made R1 on a quarterly basis on the Russell, but we are looking at the potential for the markets going up to an R2, which would be 2174, and actually when we look at this, that is not even testing the highs of the going back to 21. So things were fairly optimistic. Those who've been following me for a while, you remember back in 21 actually, there were two sectors that were actually in play that were going to be what I felt were going to be good, and that was financial and energy. And those two sectors did quite well. That's one of the things that this channel is going to pivot to. I'm going to be talking about utilizing our ETF hacking strategies and show you some of those things I'm working on. Probably end up going to be a potential blend of mid-cap and small cap. I've been working on it. Actually, for the last month, I mentioned to a friend that I've been kind of threatening you folks with putting something out for a couple months, but it's very complex right now when you're looking at the mid-caps and the small caps. Even though there's some upward potential here, it's not really robust when it comes to the bottom line of the Russell. It's really limited, and even looking back, like I said, back to May of 23, it's really consolidation. We're at least trading at the upper end of this consolidation, and like I said, we don't have a lot to look at from the algos predicting on a 3-month basis. But if we back up just for a minute, I go back to the monthly, we do have what it looks like as we come into August. Once again, somewhere between August and October, we're probably going to see peak values come into the database. So I'm going to come back up for just for a second here. So I just want to talk just for a minute, because this is important, that something we're going to have to deal with going forward as the markets get, I believe, more complex. We get into election time. I don't know what kind of shifts that we're going to get on a political scene, but what I'm talking about here, there's just no real possibilities for this Russell index to get out of its own way. Now that I said that, of course, it'll rally substantially, but we could go way up and just get back to the 21 highs. And so there's going to be a lot of challenges. And like I said, I wonder, did anyone find that mid-cap index? Yeah, so Arena, you should get the newsletter. It's $8 a month. You should do that, seriously. But I think that would help you a lot, actually, from what you're saying. But anyway, I was hoping to have that mid-cap index. But what I'm telling you here is we're going to see these small cap and mid cap. Like I said, I think mid cap ends up to be the much better index, and I'll have that. So as we go through this week, I'll make sure I get that, and we'll cover that one night. But the bottom line is what I'm seeing here is that is going to be the rotation. There's not as many zombie companies out there that is going to restrict this. So what I'm really looking at right now, the mid caps have two things going for them. Is one, their structure from a financial standpoint, they have a little bit better ability which to get funds to go forward. And they're also, this, in my opinion, is they're also in a place to participate in AI better than almost everybody across the board. We know the big guys and NVIDIAs and all that, those folks are out there. And I told you I was going to go through NVIDIA, so I'll do that next because I missed that on the NASDAQ. But we'll go ahead and do that. But just know that these things that are happening, these are big, large trends that are happening. And as long as we keep hearing all of the talking heads and everybody talking about a crash, I've never seen a crash advertised that worked, right? We've been hearing for the better part of 2 years there's a recession coming and all of this negative stuff, and none of it's come to pass. And there's not even any metrics that suggest that we were ever close to any of those things. So just know that this is big picture ideas, and this may not make you any money next week, but it does. In my opinion, you need to have these type of perspectives, especially those of you institutional folks. You got to have these big picture. This is going to help you a lot making decisions about asset classes and other things to go on. So let's go back to the charts. All right, so let's go over here, and I'm actually going to start here, and let's do NVIDIA. I just think this is a fascinating chart. This is the monthly chart, and it's mind-boggling at the strength that it has out there. And I think I put up a quarterly. There was I'm going to go through. I'll look at the weekly. There was a chart I saw. There's some Fibonacci targets on the upside that that I think are going to be really interesting. So let's flip over to weekly. I think it's there. It is not. Let's go daily. Okay, here it is. It was daily. So let's just go short term for a minute. I want you to look at a couple of things, and things that I talk about. These are, those of you who've been around the channel know the theories that I operate on. I'm big on, I always tell everybody I have a PhD in moving averages. Not only the probabilities and the probability map that we built, everything that is, that drives my thought process when it comes to the technicals are there. And then the reverse fundamentals are asking, like with the S&P target, and all these big targets on the upside on these indexes, what's going to cause that? The only thing that will cause that, in my opinion, is an increase in the productivity I went off on earlier, and then also the that's going to drive GDP and other things to go up. And if we get a new administration, we get some new bodies around the government, maybe we can tweak spending literally by 1 or 2%, and that's all it's going to take to blow this up. So make sure you look at the long-term projection. I've got some charts and things in there I think are significant for you to look at. Yeah, so I'm going to do a special on Tesla. Somebody just mentioned that. So I am really getting long in the tooth here. We're 48 minutes in, and I'm on NVIDIA. So let's just go over here and let's look at the weekly. You can see we basically got up to RTX last week. I'm sorry, not RTX, the week before last. Here's our print, and it looks like we've got more numbers. Look at this angle of attack. This steepness will keep us well above this moving average. And if we just start to look out into April, we're looking at the moving average being 879. And that target, I'm going back to daily, so I don't want to confuse you. If we go back to daily, look at these targets here on daily. We're looking at 935, 1039, and 1104 as upward Fibonacci targets. You know, I would put at least a 40% probability that we'll get up to this level here, up to the first Fib target at 935, And that's just going to blow everybody's mind because they're not going to be able to deal with these kind of numbers because everybody's telling everybody, remember before the earnings we got recently, it was like overdone and everything's going to happen. I even did a video on it showing you some of the metrics that could happen there. And I see here he's talking about what's a mid-cap these days with trillion-dollar companies. Yeah, so that is the point, Harry. Actually, just a real quick comment, since we're still kind of in this spectrum here, is that these mid-cap companies are big companies, and they're substantial, and they need to innovate to actually participate better in the economy, and that's why I believe they're going to be the real beneficiaries of a lot of the AI. And yeah, so did I say really going to $10? I'm going to show you the situation with Tesla. I don't want to even touch on that. I will do that on a separate video, maybe even a live stream. So we've only got about 10 minutes for my target. Let's see where we can get to. We've got to do treasuries next, right? Okay, so here we are at Treasuries. This is just a daily. I want to get over two things. I want to go monthly here, and what I want to show you here monthly is that, and I've been talking about this recently in the newsletter, is that we are seeing some potential where we're going to come down in. If you've been around the channel a little bit, I'm not big on trend lines. I don't like trend lines because I draw them. I find them somewhat subjective, but I do like the moving averages because I can apply some probabilities to them, and that's pretty positive from my standpoint. If we look at the algorithms, though, on the treasuries, it's starting to forecast here. We're pretty close to it that we could see some rates start to decline and get into some potentially crazy numbers. Now, this is a monthly chart. And so all of a sudden, 391 is the first target. 350, that I don't want to go even any further than that. That would put us down into the middle of this range. And this 21 period moving average on a monthly basis is suggesting we're probably going to start to roll down here. We have some crazy Fibonacci targets on the upside, but as I've talked to you about using the indicators, those of you have them, if you've got a downward slope, you got all the PPMs down, and you got this Fibonacci target on the upside, probabilities are very low that that's going to happen. We'd want to see expanding trends and things of that sort to try to hit these numbers. On all of the other markets that we've covered tonight, those are the characteristics that from the standpoint of what's likely to happen on the markets, right? So, yeah, just know this is probably a low probability, but the higher probability is that we're going to work down into this little wedge area, and I don't even know. I haven't used this tool for a little while. We're going to see if it'll crank up or not. So bear with me a second. Yeah, so there's a little wedge area here, if I can get it to work. Hang on. Yeah, so I did draw it in. So you can see this is where the market's likely to go into this range, and ultimately I'm just trying to get this tool to work. It's giving me some fits here. Okay, And so ultimately, we get into this range here, which I think is going to be where we can end up. I'm just going to draw it in. We'll put a couple arrows in here. For some reason, there it goes. So down into this wedge here is where we're likely to come to, and we have the Fibonacci targets right there, which are those levels I just mentioned, 391. Typically, we get down to the lower end of that range would be the extreme. So this is the monthly, right? So let me close this tool out. And let's go to the quarterly. So we don't have a lot of data here. We got data back to 1996, but when you start doing each bar 3 months, we did get a big reversal rejection out of the market grid. We do have an upward rising 10-period moving average, which is likely to be extreme support. That's at 3.44. So some of those numbers we were just talking about is a possibility on as far as the market starting to retrace, come back into some of these lower yields, and we'll save it for another time. Maybe I'll do a whole show just talking about the Fed and what's likely to happen in this scenario. My primary scenario I've been pushing is that what we're going to see is really a very flat yield curve. We still have effective funds every day coming in around 5.33. As you look at, you go into 3-month, 13-week, and get into the T-bills and out to the 1 year, you'll see that that you're likely to see some of these metrics start to flatten out into that range around I would say around 390 to 4.25, and you can almost draw a straight line across the board, with the exception you're still going to have Fed funds pushing that 533 and the very short end of the curve higher until the Fed starts to adjust rates, which I think they're getting close to doing. And this is something that is, I don't know, Justin, if you're talking about equities or what you're talking about, but I don't think March is going to be a down month in equities, but we could see a bit of a bull bid come into the Treasuries a little bit, not super big, but like I said, 390 is looking like a thing here, but it's still kind of bound in this 394.25 range. If you remember, I've been harping virtually every day about this 433 level on the 10-year, and we look at the 10-year. If we look at this, I'll blow this up so you can see it a bit. That's those numbers right up here. That's exactly where we got to. We got to 435 intraday. I don't think we had any closes above that level. Here's a 432.5 close. That was, let's see what this close is. Yeah, 432.7. That was right at that 433 level that I've just been harping about. That should be the ceiling of yields, and now we're coming back in. We saw a pretty good sell-off in yields, but rally in bonds. We're back to the 200, so we're coming another one of these wedge situations, which is likely to kind of hold this market at this level. So let me just come up for a second, folks. I just want to set this up. We are yeah, so I'll just come back up for a minute. This is what I'm going to do because we're already at 58 minutes, okay? I want to keep it to 30 minutes. How'd I do? Okay, so let's there's a lot to talk about. I need to update a lot of stuff. So I think what's going to happen is I'm going to cover Bitcoin because I think it's one of the most significant markets that are moving out there. And then tomorrow night I'll fill in some of the gaps. We'll continue kind of this longer term approach and stay on some of the macro stuff that comes out. And, I'll see what I can do on the newsletter tonight, and we'll put all that together. So once again, go to kendallreport.com/newsletter. You can sign up there. There's a 7-day free trial, so you can find out what that's about. I think you'll find it pretty informative, and I'm hoping that you'll subscribe, because it's really been given me the ability to unpack things and put the numbers out there. And there's other aspects of that, because the market grid's out there every night. I try to put all the charts in there so you can see it. All right, let's go back. And so we're going to do Bitcoin, and we're going to call it quits. All right. Sorry, I get long-winded, but there's a lot to talk about. All right, so I've got the daily chart up here. There was a time, you may recall, going back, that we came into early February. It was looking like the algos were suggesting we're going to see quite a bit of downside. All we did was test the 21 period moving average, right? So there was nothing really substantial happen. It was more of a consolidation, and then we get this ramp up. The other day in Substack, I had talked about targets of 71,000 on the Bitcoin, and we got up to around 64. There's the 71 target is fib target up here. Let me bring that up so you can see it. The target was 65,029, 75,772. This is a daily chart Bitcoin. And then 73,000. I'll show you the weekly chart here in a minute. But look at this angle of attack. Look at the white line. The dots are the projected, the auto regression. Machine learning is telling us that this is what it looks like going forward. That's a pretty decent trend. And it also looks like we're running up just on a daily basis up into easily the last week or two of March. But it gets more interesting when we come over to the weekly, as this is where this number was coming in at. We had 3 fib targets on the upside, 62,633, and then the next number, which is where my cursor is up here, is at 71,850. And you can see, once again, this is a weekly angle of attack. We're looking like into the end of April, still being very bullish. Yeah, this is definitely a moonshot. If we go back, way back, and I'm going to show you a monthly chart, so we'll kind of get into some of the longer term aspects. I want you to see this, and I remember going through this monthly. You could probably, if you dug through hours of live streams, you'd find it. But right here, we look at the numbers that are coming out. The targets were 55,879, 71,312, and 80,846. So when we were looking at this stuff, this was targets that came out in March of last year, so a year ago. Those are, and I always tell you folks, I always put the Fibonacci targets out. They seem like insane, like that's ridiculous, but here we are, those projections became real. And we're looking at from a standpoint of what's going on with the PPMs and all that, it just looks just incredible, sustainable, and we're not likely to really come down a lot. I think there's on the monthly basis, you can see that that projection, if we go back all the way to here, let me get the number so we can bring this up. The all-time high on Bitcoin was 69,000. So we're getting very close to printing through that high. And I'm not really a big fan of buy high, sell higher. I always call it the Jim Cramer trade. But there is a fair amount of momentum. I think we probably end up consolidating and then ultimately going much higher. So let's go to, I think this works. Let's see what I can get out of this. Yeah. So look at this. This is the quarterly chart. So this goes all the way back to the beginning of Bitcoin. But look at there's Fibonacci targets on the quarterly, which I thought was very interesting when we start to look at these numbers. And we're looking at 81,357. That's the min. And Fib 2 and 3, 106, 522, 122, 069. And I mean, maybe it's the futures, maybe it's all this stuff that we've watched happen, and now it's mainstream and it's going to go big. Maybe it has something to do with currencies and all kinds of other things. And you know, this is a very complex picture to put together, but just looking at it for quantitative basis, it looks like it's very, very interesting. Yeah, I think somebody put MDY. I believe that's the ETF. So I was hoping for a cash market, trying to get back. Anyway, thank you for that. Appreciate it. Okay, folks, we'll call it quits here. Sorry I didn't get through more, but we're going to do these every night now. So we'll come back. I need I didn't have a lot of chance to look at the interaction with the timeline here, but we'll get into, like I said, as we go through the week, we'll be able to really unpack a lot of this stuff as we go forward. So I'm looking forward to it. It's great to be back on YouTube. Thanks for showing up. We managed to get some pretty decent traction. You definitely, if you came in late, as soon as this replay comes, scrub it back and rewatch the video. Now, I'm not doing the 3-minute, music and all that stuff. I'm going to leave you because I know a lot of folks like my indie music. For tonight, I'm going to put the indie music on. So if you folks want to chat, I'll be hanging out a little bit. Maybe I'll make some comments. But anyway, thank you again, folks. Really, hit the darn like button. I need 1,000 of these. We need to get this channel really up and running. I think we're at 32,000 subscribers, and we didn't lose much, oddly enough, even through the down period. So I was offline for the better part of 3 months. It's nice to be back, nice to be talking about these things in more depth, and I appreciate it. But yeah, so we're going to get through it. We got a lot to do. We got a lot of work to catch up with, and I think there's some very significant things that are happening in the planet, and this is besides all the craziness around us. So anyway, everything from wars and all kinds of things going on to crazy debt. I saw a number that we're going to increase the debt by $1 trillion every 100 days, I think it is. So I remember, I think there's in our old VPNpartners.com website in the firewall, I did a special report. I think it was 2018, might have been 17. I was looking at some of these reports, and I was talking about what's the number where the debt's too high or when it's too much. And I remember, I think it was 18 trillion at the time, and I'm going, well, is it 22, 24, 27? We'll see. Well, it's 34 plus, and we're still going. And I think one of the situations to tie it all together, I'm going to pitch you one last time before you leave to make sure you read that Substack letters, because you can do a freebie. There's a free trial, but go back. There's a whole bunch of content I did earlier on that, and I plan on, there's a number of things that I am going to do free and paywall stuff. So, and the most I'm asking for any paywall is $8. So, and that's for a month. I was laughing, and I posted this, I think, on X one day, that I put some of my old newsletters I used to do every 2 weeks, and I charged $340 a year in 1987. So this is a bargain. Even if you convert that, it's like $1,200 a year to current dollars. So go ahead and get signed up. And like I said, there's a lot of freebies. To sign up for free, you get a 7-day trial, and I'd like to see that thing get up into 10, 20,000 subscribers, because that's going to give us a lot of outreach and ability to start really creating some special content. And we got some surprises coming, and I'm working on some great projects. So thanks for hanging out. Thanks for all the nice comments. And yeah, it just depends on the, I see, Bo, I see your comment there on the Russell. I try to do it. Sometimes it really didn't do much. There's nothing to change. So I'll always update that if there's a reason. And I'm a bit of a night owl. So a lot of times I'm finishing that thing at anywhere from midnight to 1 in the morning, my time. So I like to take a break from everything and then do that late at night. So sometimes it could be I'm tired, but most of the time I try to do that. If there's any significant movements in a Russell, I'm definitely going to cover it, and I'll do that. We'll just see what kind of bandwidth I personally have when I get there. But thanks again, everyone. All right, that's it. 1 hour, 10 minutes. Not quite 30 minutes, but yeah, make sure you comment on this video, all right? Thanks a lot, folks. We'll see you soon.